way out to September and December, but there are rate hikes that are being priced into the market there, which is very interesting from the perspective of, the inflation expectations have continued to increase here. We have had now 2 days in a row where we have had CPI rising higher than it was expected due to services, and then core PPI and PPI significantly rising here, higher than expectations. 0.3% was the expectation. We came back at 1. This is 0.5%. We came back at 1.4%. These are the highest levels back from even March of 2022, I believe. So it's an incredible increase, and what we're watching for as we go into our second half of the week is what reactions that we have inside of these dollar support levels. Now, the dollar has what we were watching for as we were going into the morning was a dollar weakness trade that would potentially fuel the indices higher. And we haven't had that dollar weakness trade. We are running into a long setup on the dollar from yesterday afternoon's lows to highs. And so if you were just looking at the dollar right now being at its highs of the week, essentially, and knowing that you have a negative correlation that is in and around the 0.8 and almost 0.9 negative correlation over the 30-day and negative 0.8 over the 15-day, that is an incredibly negative correlation. So, if you were to look at that dollar correlation and you were looking at the dollar and you were to ask someone, where are the indices right now? With a negative 0.89 correlation with the US dollar, you would suspect right now that you would be potentially in a afternoon highs to lows, a little short setup, and you're probably sitting at the lows of the week. If you were thinking about those negative correlations, what are the indices doing? The indices rallied away from their long setups. A perfect stick save, by the way. A perfect stick save of our bullish setup here as we went into our morning. Are they at the lows of the week? No. There's a huge divergence right now between the dollar and the indices. And we're going to get on a little bit more of this here and how it relates to March 30th of about 6 weeks ago in just a moment. But in US dollar terms, there is a huge divergence right now with the indices. What about Bank? Well, Bank is sitting at its lows of the week. It's sitting at its lows of the week. It wasn't even able to squeeze back up into its 50% short from highs to lows. So knowing how often Bank and the indices look together, what did Bank actually run into? It was front run inside of its halfway back short for the week. If you were to ask someone that paid attention to the financials, if you had to guess right now, you haven't looked at the indices all week, and you know their relationship, where are the indices right now? And you would suspect, they're probably pretty close to the lows of the week, since the financials have such a heavy influence over the broad markets. And again, you have a scenario here where the indices perfectly rallied away from our traditional long setup, stick saved our line in the sand, and are at their highs of the week. Exactly the opposite. Very interesting, isn't it? What is the rule with this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.